Yo, what's up, everyone? My name is Diamond, and we're talking about unusual options activity. All right, let's kick it off with the disclaimer. So, disclaimer: this video is for educational purposes only. Statements made in this program are solely the opinion of the channel, are not a specific inducement to make an investment. One must affirm their own due diligence and realize that all investments carry risk. There's no guarantee of profit. All right, everyone. First one I want to bring up is GM. Now, this stock has been punished terribly for some of the recalls that they're going to be doing. They just came out with news after the bell on Friday that they're doing another $1 billion of recalls, only about 77,000 cars. So $1 billion is pretty hefty, obviously. But I'm going to be watching GM closely here for, as you can see here, it's down in after-hours trading about $1 from where it closed, 48.80 down to about 47.70. The news came out after the bell. Some people were buying some of these March 2022 57.5 strike call, 5,000 contracts traded above open interest of about 335. Now, I'm going to be watching GM closely tomorrow, Monday, to see if this stock is down in the morning and has a reversal. So we have a bad news, good price action type of scenario there. And if so, I'm going to be adding to my position in GM, possibly buying some calls, possibly buying some more stock here, because this stock has been punished extremely to the downside, just way overblown in my opinion. It's down almost about 15 points from its high. It's oversold, as we can see here in the RSI. You know, some of these momentum indicators here are pretty much getting close to the pandemic low of how much this thing has sold off, from about 64 down to 48. Now, I think the long-term future for GM is extremely bright with all of the fuel cell technology, hydrogen technology, EV battery, Ultium battery technology. I think this is going to be a major player in the future of EVs. Now, the stock is getting a little bit hammered here because of the chip shortage, also because of some recalls that they're having to do for the Chevy Volt. But, you know, if you think that that single crappy car is the future of GM and you're selling the stock because of that, in my opinion, you are hugely mistaken. And I think it's about time to start adding to some GM. So, next one I want to bring up is Gap. Now, I've been bringing some of these retail stocks to the channel lately. Macy's, Bath and Body Works. Macy's and Bath and Body Works. Both those stocks did extremely well in their earnings. Macy's was up about 20%. I brought that one up on the channel before earnings. Also, Bath and Body Works was up like 10 or 12% after earnings. I brought that one up. I brought both those up on the channel. I think on Tuesday. They had earnings on Thursday. Now people are coming in and getting some of these Gap options that expire this week. Now, August 27th, as you can see here, there's a lot of volume here in these 29 strike, 30 strike, and also if you come look at the puts here, there's some volume in these August 25th or August 27th, 25 strike puts. Now, you might say, all right, there's some put volume there. That is not good. You know, that's not bullish. You know, if you come here and look at what's going on here, so you can see here that these are all a part of a spread here. Most of these trades are a part of a spread here. And what they're doing here is they're buying the 29 strike here. They're selling the 33 strike call. And then they're shorting the 27 strike or the 25 strike put. So what they're doing here is they're getting the 29-33 vertical debit spread. So they're buying the 29 call, selling the 33 call, and then they're also shorting the 25 strike put. So if Gap is below $25 here on August 27th, they're going to be forced to buy the stock at 25, no matter if Gap is at 20, 15. Right now the stock is at about 28, 27. So they're placing a huge bet here that Gap is not going to be below $25 a share on this week expiration, August 27th. Otherwise, they're going to have to buy the stock at $25 no matter how low the stock goes on earnings. Now, earnings are this week. I think they're either Monday or Tuesday after the bell here. I really like this action. When you see somebody coming in shorting puts here, that means they're extremely bullish here. I decided to just go with I like somebody who's doing vertical spreads. Whenever someone's doing vertical spreads, I tend to just copy that exact same trade. So what I did here is I did the same thing. I bought the 29 call and I sold the 33 call. I think I paid about $77 per option contract. And if you've been watching this channel for any length of time, you know that the maximum value of this spread is the difference between the strikes. So 33 minus 29, we paid $77 for something that can go to $400 if the stock is through 33 our short strike on expiration. So I really like this trade here going into earnings. I like Gap. Athletica is the story of Gap. If you don't know, check it out. It's pretty much the same thing as Lulu, but a heck of a lot cheaper. I've heard a lot of people say that it's even better quality here. So I like Gap going into earnings. I like that the stock has sold off $10 here. Probably like 15 to 20% sell-off going into earnings. I think earnings are going to be strong. I'm in these options. I'm probably going to be looking to add to these options before earnings because I'm that bullish on this trade. So thanks to everyone who's been subscribing. I hope you guys are liking the trades that I'm bringing. Make sure to look back at my past videos if you guys are just learning options trading. Pretty much in every single video, I'm giving away tips. Giving away updated information on trades, giving away, trades, obviously, what I'm doing with the trades, how I'm positioning, and analyzing the unusual options activity. So make sure to shoot a subscribe if you enjoyed the content. Make sure to like this video so I know to keep making more videos like this, and we'll see you in the next one.